Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories buried in corporate filings. And speaking of buried stories, get ready because we're about to dig into Dinewise Inc., a company that seems to be in a bit of a transformation whirlwind. This is their quarterly report, the Form 10Q, and it's like peering into the company's financial diary for the period ending March 31, 2025. Before we dive deep into the numbers, if you're tired of corporate jargon and want to know what's really going on with companies, smash that subscribe button. And for those of you who love a good financial breakdown and want to connect with like-minded people, check out our Discord community linked in the description below. So Dinewise Inc., as they're now called, Superstar Platforms Inc., have filed their report. They were incorporated way back in 2002, and as of March 2025, they decided to rebrand. This report is for the 3 months leading up to March 31, 25, and it's giving us a real-time look at their financial pulse. Let's kick things off with the balance sheet. It's like a snapshot of what the company owns and what it owes on March 31, 25. Total assets were $441 and $921,674. This right away tells us they owe more than they own, which isn't a great sign. And then there's the accumulated deficit, a running total of all the losses the company has ever experienced. As of March 31, $2,000 and hefty $80, 858 odd. That's a big hole to be in, and the report itself acknowledges in Note 2 undergoing concern that these factors raise substantial doubt about the company's ability to continue as a going concern. In simple terms, they're struggling to stay afloat. Now let's look at the income statement, the P&L statement for the 3 months ended March 31, 2025, compared to the same period in 2024. In 2025, they had revenues of $18,900, which sounds like a lot, but compared to the previous year's zero revenue, this is the only income they managed to bring in. And what about profit? Well, they didn't make any. For the 3 months ending March 31, 2025, their net income was a loss of $81,101. It seems the company's operational expenses are way outstripping their meager income. Speaking of expenses, officers' salaries hit $84,000 for just 3 months. That's a lot of money going to leadership when the company is losing so much. This statement shows how the owner's stake in the company has changed. It highlights a significant number of shares issued. For instance, during the period ending December 31, 2024, they issued $17,000 shares. And in the period ending March 31, 2025, they issued another 7,145. They issued another 7,145 to FAR shares. This is a common way for struggling companies to raise capital, often by issuing more stock, which dilutes the value of existing shares. Looking at the cash flow statement, this is crucial for understanding if a company has enough money to operate day to day. For the 3 months ending March 31, 2025, operating activities used $155 or when he forced a mere $4,000 in cash. Again, this outflow is much larger than the cash provided in the same period of the prior year, which was a mere $4,041 in cash. Again, this outflow is much larger than the cash provided in the same period of the prior year, which was a mere $4,491 in cash. Again, this outflow is much larger than the cash provided in the same period of the prior year, which was a mere $4,491 in cash. Again, this outflow is much larger than the cash provided in the same period of the prior year, which was a mere $4,491. And their total cash at the end of the period, March 31, 2025, was just $23,029. That's barely enough to cover a few weeks of their current operating expenses, let alone their substantial liabilities. In Note 1, it mentions that Dinewise Inc. is a subsidiary of a larger technology conglomerate, and that growth will primarily be driven through strategic acquisitions. However, it also states that currently Superstar Platforms has no affiliated or subsidiary companies. This makes their growth strategy seem a little unclear given their current financial state. We already touched on this, but Note 2 really drives home the point that the company is in a precarious financial situation. The accumulated deficit and lack of business operations are major red flags indicating serious trouble. Here we see their accounting policies, including how they value assets and recognize revenue. It mentions interest income is recognized on loaning money to customers at a 2% simple interest rate monthly. However, in the management discussion and analysis section, they mention loans to small businesses that bear interest at an annual rate of 24%. This discrepancy in stated interest rates is a bit unusual. They discuss fair value measurements and their financial instruments. They claim their carrying values approximate fair values, which is typical for short-term or non-traded assets. However, given their overall financial health, this statement might be more aspirational than factual. The company reports not having any interest or penalties associated with tax positions and no significant unrecognized uncertain tax positions as of March 31, 2000, and certain tax positions as of March 31, 2000 really help their current operational struggles. They talk about capitalizing costs for website development. While this is standard practice, it raises questions about what exactly their core business as Superstar Platforms Inc. is supposed to be, if they are investing heavily in intangible assets that haven't even generated significant revenue yet. Their revenue recognition policy states that interest income is recognized upon loaning money. The marketplace earns a fee or commission when a transaction is facilitated. However, the numbers simply don't support this clearly. As of March 31, 2025, they have 175,739,101 shares of common stock outstanding, a substantial number, and this is likely to grow with future equity issuances. This note mentions a name change to Superstar Platforms Inc. on March 27, 2025, which we've already discussed. More importantly, it notes they issued 3 million shares of unregistered common stock to a note holder to cancel a note of $63,000, a debt for equity swap, which is common when companies struggle to pay off debt. This section is the management's narrative about the company's performance. They acknowledge the name change and their intention to become a technology conglomerate and a lender to small businesses. But right now they have no affiliated companies. They mention their history as Simplegene USA Inc. and then Dinewise Inc. It's a bit of a shell game if you ask me with all these name changes. They also mentioned they qualify as a smaller reporting company with revenues under $100,000 and a public float under $250 million. Here in the results of operations, they confirm that revenue for the 3 months ending March 31, 2025 was $18,900. They explicitly state the increased loss was primarily driven by investment losses, including unrealized investment losses. Again, this doesn't paint a picture of a robust operating business. Operating expenses totaled $100,090 in March 31, 2025 compared to $4,491 for the same period in 2025, showing a massive increase of 175%. This is concerning given their revenue. Web and Map. This part is critical. As of March 31, 25, they had total assets of $441,919 and working capital of $23,029 balance from a related party, with accrued interest. Their new venture lending to small businesses with a $315,000 outstanding loan balance from a related party with accrued interest. Their new venture lending to small businesses with a $315,000 outstanding loan balance from a related party with accrued interest. Their new venture lending to small businesses with a $315,000 receivable is an attempt to generate cash, but it's early days. They state they have no off-balance sheet arrangements that are reasonably likely to have a material future effect. This is a standard disclosure. They also mention their operating results are not affected by seasonality, which is good to know. However, they do state that periods of high inflation and economic downturns lead to increases in revenue, but also increased defaults on loans. So inflation is seen as a double-edged sword. This section details their accounting policies. They mention the preparation of financial statements generally doesn't call for estimates due to the limited level of operations, which is a direct way of saying they aren't doing much. Here's where things get really interesting. Management admits their disclosure controls and procedures were ineffective as of March 31, 2025. Due to a material weakness in internal control over financial reporting, they identify inadequate segregation of duties and insufficient written policies and procedures for accounting and financial reporting as major issues. They plan to fix this by hiring more staff and implementing better policies, but say it's dependent on securing additional financing. It's a classic case of we know we have problems, but we need money to fix them. They report no pending legal proceedings, which is a positive note. They mention issuing 3 million shares of unregistered common stock to cancel a note of $63,000. This is a debt for equity swap. They clarify they have no senior securities, but outstanding convertible debentures held by an insider. The principal on this note was $227,000 as of March 31, 2025. The exhibits list includes standard certifications and XBRL filings, which are technical in nature and not really for our focus today. So what's the story here? Dinewise Inc., now Superstar Platforms Inc., is in a really tough spot. They have a massive accumulated deficit and very little cash. Their revenue is minimal and their operating expenses are soaring, with a significant portion going to officer salaries. They are trying to pivot to a technology conglomerate and lending business, but currently have no subsidiaries in place to support this vision. The management admits their internal controls are weak and their ability to continue as a going concern is doubtful. The constant name changes and reliance on insider loans suggest a history of struggling to find a sustainable business model. While they have made some moves with loan receivables and debt for equity swaps, these seem more like survival tactics than a solid growth strategy. My take is that this company is extremely high risk. They need significant external funding to even begin implementing their stated strategy, and even then success is far from guaranteed. They're essentially a startup with a very long and troubled history. What's your take on Dinewise Inc. and their ambitious rebranding to Superstar Platforms Inc.? Do you think they can pull it off, or are these numbers a clear warning sign? Let me know in the comments below if you found this breakdown valuable. Please give it a thumbs up and subscribe for more financial investigations. And don't forget to join our Discord community for deeper discussions. Thanks for watching, and we'll see you in the next one.